All right, RMJ, we're diving into the patois group consolidation. We've got the data for patois and slang, and I see the full answer key here too. I've laid out a roadmap to get us through this step by step. Since you're looking for a full walkthrough, do you want to just start from the top with the group structure? Or is there a specific part of the math that's tripping you up right now? Let's get it. Step one is always figuring out who owns what. If we don't get the structure right, the whole house of cards falls down later. So, look at the prompt. Patois bought 90% of slang. That 90% is our parent share. That leaves 10% left over. In accounting, we call that the non-controlling interest, or NCI. It's just a fancy way of saying the other guys who still own a piece of slang. This 10% is going to be super important when we calculate the profit at the very end. Does that split make sense to you before we start adding the numbers together? Perfect. Now we move into the line-by-line consolidation. This is where we combine the two companies as if they were one single entity. The basic rule is simple. We add 100% of the parent's numbers to 100% of the subsidiaries' numbers. Even though we only own 90%, we control the whole thing, so we report the whole thing. Check out the revenue. We took the 100 from patois and the 90 from slang to get 190. Same for cost of sales. 75 plus 55 gives us 130. These numbers come straight from the income statements in your materials. That gives us a gross profit of 60. Now, based on what we just did, can you guess how we'll handle the distribution costs if patois has 5 and slang has 6? No worries at all. Let's strip it back. Imagine patois is a big pizza shop and slang is a smaller one they just bought. If the big shop sells 100 pizzas and the small one sells 90, how many pizzas did the whole group sell in total? That's all consolidation is. We just add their results together like one big team. So, looking at your handout, patois spent 5 on distribution, like delivery costs, and slang spent 6. If we add those two together, what's the total cost for the group? Yep, exactly. You just consolidated your first expense. Great catch. It's super important to know exactly where these numbers live. If you look at the first page of your materials under the statement of profit or loss table, find the row labeled distribution costs. We grabbed the 5 and 6 from that source table for distribution, and I also added the admin expenses using the same logic. 8 from patois and 10 from slang. Do you see those 8 and 10 values in the administrative expenses row of your source material? Spot on. Now, here is where it gets a bit tricky. Look at the next line in the source table. It says dividend from subsidiary for Patois is 4.5. Take a look at that. In a consolidated statement, we pretend the two companies are just one big happy family. If I take $5 out of my left pocket and put it in my right pocket, am I any richer? Exactly. So that 4.5 dividend, we ignore it completely. We don't add it to our consolidated profit. Does that make sense why we leave it out? Perfect. Since we're skipping that dividend, we can jump straight to the taxes and then find the total profit. Bad. I'm right here. Let's wrap up the main profit calculation. Whoops. Looks like I hit a little lag spike there. I'm back. Let's finish up the main math so we can see the total profit for the whole group. Just like before, we add the taxes together. 4 from Patois plus 6 from Slang equals 10. When we take our $60 gross profit, subtract 11 for distribution, 18 for admin, and 10 for tax, we end up with $21,000 in total profit. Now, here's the final boss move. Remember that 10% interest we talked about earlier, the NCI? Since we consolidated 100% of Slang's profit, but Patois only owns 90%, we have to show that 10% of Slang's profit belongs to those other owners. If Slang's total profit was 13, how much is 10% of 13? Boom, you got it. That 1.3 is the slice of the pie that belongs to the non-controlling interest. Now we just split that total 21 profit into two piles. One for the NCI and the rest for the parent owners. And that is the whole thing. You just built a consolidated profit and loss statement from scratch. To wrap this up, would you like that summary and those flashcards we talked about? I hear you. This stuff is dense. And sometimes seeing it all at once makes it click better. Let's do a high-speed, high-energy rerun. First, we looked at the ownership. Patois owns 90% of Slang. That's our starting point. Everything else flows from that 90 to 10 split. Next, we did the pizza rule. We literally just added the lines together. Revenue was 100 plus 90. Cost of sales was 75 plus 55. We did the same for distribution, 5 plus 6, and admin, 8 plus 10. Third, we dodged the dividend trap. Patois claimed a 4.5 dividend from Slang. We deleted that. Why? Because you can't make money by paying yourself. It's just moving cash between pockets. Then we handled the tax. 4 plus 6 equals 10. When you do all that math, 190 minus all the expenses and tax, you get 21. That's the total profit for everyone involved. Finally, we split that 21. We took Slang's individual profit, which was 13 in the original table, and gave 10% of it, 1.3, to the NCI. The rest, 19.7, stays with Patois. Does seeing it laid out like that in one go help clarify where we started and where we ended up? That is a legendary question. It's the most common mistake students make. Think about it like this. If you add Patois' profit and Slang's profit together, you'd actually get the wrong number because of that dividend we talked about. See that? We get 31 by doing 60 minus 11 minus 18. If you just added the two profit before tax numbers from the sheet, 16.5 and 19, you'd get 35.5. The reason they don't match is that 4.5 dividend. That's why in consolidation, we ignore the profit totals on the sheet and build our own total from the top down. Does it make sense why we calculate it fresh instead of just adding the bottom lines together? Boom. You're getting the hang of this. Once you realize we're just rebuilding the whole statement from the ground up, the pieces really start to fit. To lock this in, I've got those revision flashcards ready for you. Ready to see them? There they are. These three usually cover the most common trip-ups in these problems. How are you feeling about the Patois group now? Alright, let's break this down once and for all. This is the part that makes everyone's head spin at first. We are basically taking that 21,000 total profit and splitting it into two separate piles. Here's where those numbers came from. That 13 is the profit Slang made all by itself, which you can see at the very bottom of the Slang column in your original materials. Since the NCI owns 10% of Slang, they deserve 10% of that 13. That gives us the 1.3. Then, for the parent share, we take the whole group's profit, that 21 we calculated earlier, and we just subtract the NCI slice. 21 minus 1.3 leaves the parent with 19.7. Does seeing where that 13 and 21 came from make the attribution part clear? My bad for the confusion. That 13 isn't a percentage. It's actually $13,000. If you look at the very first image you uploaded, find the table for Activity 1. Go to the bottom row called Profit for the Year, and look under the Slang column. You'll see the number 13. So it's not 13%, it's 10% of the $13,000 that Slang earned. Does that clear up where that 13 came from? That is a brilliant question. You're looking at that 12.5 profit for Patois and wondering why it's not in the final split, right? Here's the trick. The 21 group profit we calculated earlier, it already contains Patos's results and Slang's results combined. If we use the 12.5 and the 13, we would be double counting that 4.5 dividend. By building the statement from the top down to get 21, we've already included Patois' share. We only need the 13 to calculate the NCI slice because the NCI only has a claim on Slang, not on Patois. Does it make sense that we only use the subsidiary's separate profit for the NCI calculation? Boom! You've officially conquered the Patois Group consolidation. You're tracking the ownership, you're dodging the dividend traps, and you're splitting that profit like a pro. Since you've got a solid handle on this now, is there any other part of this homework? All right, let's do one last high energy breakdown of that profit split to make it stick forever. $21,000. We take Slang's individual profit of $13,000 and multiply it by the 10% the NCI owns. That gives them 1.3. The parent, Patois, gets everything else, which is 19.7. Done. Here is your quick summary. Remember, add everything, delete the internal dividends, and then do the final split. Those cards are your secret weapon for the exam. You crushed this session, RMJ. If you're all set, I'll let you get back to it. Great work today.